on the banking committee who talked about his conversations he's had with Donald Trump when it comes to crypto. So what exactly could that look like? Let's get more with Nathan Dean of Bloomberg Intelligence, who looks at U.S. policy for us. He's joining us from Washington. So Nathan, when we talk about what a crypto-friendly president or administration would look like, are we essentially talking about one in which the SEC just has less power to regulate by enforcement?
Yeah, exactly. I mean, I think there's two scenarios here. The first scenario is J.D. Vance is one of the first candidates we've seen to have such a substantial amount of crypto holdings. I mean, in his last disclosure, he had at least $100,000 worth of Bitcoin. And there's been talk that Senator Vance is actually pushing legislation right now that is more industry friendly than what House legislation came out earlier this year. The idea here is taking away a little bit more of the focus of crypto from the SEC and potentially giving it to the Commodity Futures Trading Commission, which is where a lot of the crypto world wants. So I think in terms of like Bitcoin and also just other crypto platforms, like Coinbase in particular, a J.D. Vance presidency, if President Trump decides to delegate additional authorities to the vice president and say, here, go play in the crypto space, it could be good for the sector.
Nathan, your phone's always ringing, which we love asking you about. When your clients call terminal users with questions, with concerns, what were the questions and concerns you heard after this appointment?
So it really comes down to Senator Vance's economic populism aspect, because I think a lot of people just presume Republicans equal this or Republicans equal that. And with Senator Vance, it's a little bit more complicated. For example, Senator Vance has been somewhat tough on banks. He has co-sponsored legislation with Senator Elizabeth Warren to claw back incentive compensation plans from the biggest banks. He's worked with Senator Sherrod Brown on railway safety. He's a co-sponsor of Senator Durbin's Credit Card Competition Act. This is the one that will actually take away a lot of money from the banking sector. So he has a mixed record. But on the same side, he's also very much a populist in terms of calling for the Basel III endgame to be done away with, this idea of higher capital requirements. So I wouldn't say that the vice president is always the most catalyst moving or changing pick in terms of policy. But if we get into a scenario where if President Trump wins in November and he decides that he doesn't want to focus on financial regulation and so forth, Senator Vance could have a very powerful position to play there.
I wonder, Nathan, if the real question for terminal users, market participants, isn't as much about the impact that Senator Vance could have if he becomes Vice President Vance in a second Trump administration in the near to medium term, but more like what the selection of J.D. Vance actually means for the likely trajectory of Republican economic policy for years moving forward, potentially, as we consider he's a 39-year-old. We've been talking today about whether or not this marks the end of the old Republican Party and the official establishment of the new right in which economic populism is a forefront issue. What do you think about that?
Yeah, so I think there's a short-term and a long-term aspect to this. So the short-term is that Senator Vance, like we've just been talking about, will probably be influencing the president if they are elected on things like trades and tariffs. Senator Vance has said multiple times that China is the number one issue for the United States. So, because the power of the presidency is a lot more powerful there, I think that there's certainly from a market participant perspective, that trade, that tariff debate and so forth should be at the forefront of any market participant as they're assessing their portfolio. But then longer term, how does this play out with the Republican Party? We saw a gentleman from the Teamsters yesterday speak at the Republican National Convention. That sort of flies in the idea of President Biden being the union candidate. So I think that, we are seeing, the changing of the parties, and it's this idea of corporate America versus, this economic populism movement. And look, it's not going away. It's just something that we're going to have to deal with for many, many years to come.
It's something that we're talking about as the Trump trade, Nathan. It usually involves crypto, DJT, solar stocks, maybe you throw banks in there or something. But is the Trump trade real? And if it is, does it outlast this brief period that we're in now?
So I think the idea of the Trump trade is really depending on your time frame. So obviously we've seen prison stocks, private prison stocks move off of this. But that's such a short-term catalyst because that is just at the high idea or the high-level idea of President Trump equals this policy, and therefore private prison stocks would move up. But I think it's really long-term. How does President Trump, if elected, would implement his policy? Is it legislation Well, things aren't really going to get done in Congress no matter what happens in the election next year. Is it tax reform? Well, if the House and the Senate goes Republican and President Trump wins, then there is this opportunity for tax reform in terms of the reconciliation. Is it regulation or is it executive order? So think about how these policies actually work out, and you'll get a better time frame. In terms of things we're looking at, investment banks, that's the regulatory angle. If President Trump wins, the Basel III endgame is mostly gone. If he also wins, electric vehicles like Tesla and Rivian will be exposed. But that's also more likely a headline risk associated with executive orders telling the Treasury Department to alter tax credits there. So it really depends. But we have 5 sectors to watch right now in a Trump presidency. It's investment banks, big tech, electric vehicles, manufacturers, and go from there.